You're welcome back. Well, let's see if this success story can lift our spirits a bit. The Federal Inland Revenue Service has said that it generated over 10 trillion naira, in fact 10.1 trillion naira as tax revenue in the preceding year 2022, and that's the highest tax collection ever recorded in the agency's history. And it's been said that the agency achieved over 96% of its collection target for the year. Is this a testament of improved processes, or is it coincidence? We have Emmanuel Onasami, the lead partner with Cardinal Professional Services, joining us in the studio. Good morning, Mr. Onasami. Thank you so much for your time. Should we say congratulations to the FIRS, or is this a coincidence? What happened last year?
Well, congratulations will be in order. Leaping from 6.4 trillion to 10.1 trillion is actually a leap. From the oil revenue, they were able to almost double, the income from that hand, and also from the non-oil, receipt, they were able to add about additional 2 trillion, So it's in order to say congratulations to the FIRS for this, but not to say, the work ahead is still much, because if you place this, as a ratio of our GDP, it's still way far less from what is expected from a nation that really wants to survive from the tax route.
So how would we say this was achieved? Was it that the tax net has been expanded, as we always say, or was it less compromise in the system, or what really drove this increase?
Okay, so if you look at the numbers very critically, if you look at the oil, last year they did about 2.004 trillion, and this year about 4.009, So oil receipts, that could be a testament to the fact that the oil industry has a bit stable. The prices has been going up. That means players in the industry, performance also must have improved to the end that you can pay more taxes. And if you look at the non-oil receipt, that's where you can also now say, the taxman, number one, from the use of technology. Number one, they introduced the technology for compliance, and then tax collection, the tax promas, like we typically know, that has been able to help them to eliminate some discretion around compliance. The system is now automatic. When you put in your figures, your amount, your penalty, and you then pay. That makes collection much more easier from the Compliance Act. And kudos to the FIRS also. They have been painstakingly participating in the process of improving the tax environment. Year on year, we have been publishing the Finance Act, where some laws are changed, some tax rates are changed, the VAT sometimes increased from 5% to 7%, in the proposal we have on ground, we're trying to push tertiary education, a bit up. Those are the kind of factors that must have also painstakingly, helped the FIRS to achieve this increment. And if you also look at it also, FIRS has been more coordinated in their approach with looking at existing taxpayers to see whether what you have actually paid in your taxes are right in the process of tax audit exercise. Well, while some people may think that their approach may be deemed aggressive, but that also may have contributed significantly to the contribution. So from the perspective of the FIRS, they have paid a bit of their cost of ensuring that this number goes up. But we need to balance things also from the perspective of the taxpayer. And one of the biggest things I want to put on the table is the fact that somebody needs to be watching the fact that our FDI inflow has consistently declined since 2019 up to now. That means that, there must be something that the government needs to pay attention to, because your tax climate is the biggest contributor to your FDI inflow in your country. And what we have seen from experience, when the taxpayers the tax authority keeps going back to the existing taxpayer, and there are a lot of data that we have been gathering in this country that shows that we still have a larger percentage of people that are yet in the tax nest. But if you keep frustrating in that sense, in quote, because that is the perception of the taxpayer, you see a situation where the tax law is not clear on the matter, but the FIRS is a bit aggressive, and the body language to the global community is like, oh, the tax environment in Nigeria is unpredictable. Year on year, they keep changing the goalpost. Also, if you look at the issue of Finance Act, the FRS has been changing a lot of things in the tax environment that then makes the tax climate also unpredictable by global investors.
Yeah, I was going to make us stay a bit on that Finance Act because it is a major one.
Yep.
We've had a lot of opinion, perspective, and there's hardly anyone that's applauding some of those adjustments being done to it, because currently I think businesses have to pay about 30% of their profits as tax. And by the time you have this new adjustment, what is left? And we're talking of inflation, we're talking of, the pressure coming from running your businesses and, all of that. And then when you not add this new, I think it's a good thing that the president hasn't assented to it, but we don't know what adjustment is going to be done to it, because we had business people really complain about those adjustments and additions, especially that have been brought into that Finance Act.
Yeah, you're correct. Let me just say that the idea of a Finance Act is not wrong. You understand? And yes, attack will come. So the idea of the Finance Act is that you have your Appropriation Act every year, and then tax is a major contributor to your fiscal policy, isn't it? So your Finance Act is expected to look at your Appropriation Act and what you need to adjust within your system, in order to be able to achieve the goal for the year. You understand? But what we've seen in more developed climes is that so that the tax environment can be predictable by investors, you don't on an annual basis change tax rates. You don't decrease tax rate, but you rather make the process of compliance more efficient and the process of getting more people into the tax net more efficient, such that people that are evading tax can now come into the tax net. But what we've seen, the behavior we've seen with the Nigerian government, with the use of the Finance Act, kind of predict that anytime the government needs additional cash, you just go the route of increasing the tax rate, or introducing additional tax, which then makes the environment look like, the government is using the Finance Act as a purpose of just getting more revenue from the existing taxpayer, instead of painstakingly putting process in place and ensuring that we widen the tax net and get more people to comply with taxes in Nigeria.
So if we have this 10.1 trillion naira from 2022, what do you see in 2023? And will it reduce the borrowing? Because currently we have 11.04 trillion naira as deficit for the budget. Do you see it decreasing, some of those borrowings, especially now that Moody's has downgraded?
Yeah, it's anybody that becomes the sheriff eventually definitely has a very critical job, to do. Moody's just downgraded our credit rating as a nation. That means the cost of borrowing will go higher if at all you are able to get. You understand? And that means that government has to look inward. And looking inward is not to say you go after those people that have been putting all the effort to comply, just frustrating them. We've seen situations where people are experiencing multiple tax audits at the same time at the expense of doing the business. We have enough data that the next phase of administration in Nigeria, based on my perspective, is that we need to do a bit of data mining and see those people that are not complying with tax so that they can start complying, starting from the leadership, starting from the political class. In this election, we've not seen the tax authority ask the politicians about their tax receipts. You understand what I'm trying to say? So these are potential areas of tax leakage that we can potentially bring into the net, and more other people around the politicians that are not paying taxes, and more businesses around the government that are also not paying taxes. So this current administration that will come in has a lot of job to doing the business of widening the tax nets rather than frustrating the existing business out of Nigeria, because we need the FDI to keep coming in.
And another conversation that goes on around taxes, what is it being used for? Do I feel the impact? Even as a business, you still have to provide your electricity, your water, your road and infrastructure. So why should I go through the trouble of even paying so much tax? Why don't I look for a way to cut corner and pay less so I can use the money and take care of those needs?
While it may sound justified, because of the reality on ground, the position of the law is still the position of the law. You know, if you are expected to pay the tax, then you have to do the right thing as a good citizen of the nation to pay the right. And one thing we can do as citizens is to also be more interested in the system, engage the government, ask for accountability, you know, in the what we use our tax for. Sadly, in Nigeria, our current tax receipt is not even enough to service our recurrent debts, not to even talk about recurrent expenditures, talking about the civil service, you know, that is already bloated up, you know, and most of the infrastructural development we've seen have been done through the instrument of debt by the government, you know, and that's why it has become very, very imminent, you know, on anybody that gets there to ensure that we increase our tax earnings going forward.
And another conversation around that is the tax waiver. Last year it amounted to 1.8 trillion.
Yep.
Imagine adding that to the 10.1 trillion. So you're talking about almost about 20 to 12 trillion. But of course, the tax waivers are supposed to also come with some advantages and benefits to the economy. I guess it's now left for the government to find a way to balance waiving tax and still getting the tax that they need.
Yeah, so currently, you know, the tax waivers we have around are ordinarily tied to some economic development program, you understand? So for example, your pioneer status incentive, you know, you are bringing in technology, you are opening up a new industry, and then they give you that waiver. You know, but the challenge is that are we tracking the results? You know, you've been giving waiver for so long, and you are not seeing the impact. Are you not expected to review it and still see whether this is still a viable waiver to continue to give? You know, those are also the areas that the government and the tax authority needs to continue to evaluate and say, okay, we have so waivers on ground. How impactful have they been over the years? And do we need to cut down on some or relook the others or modify the waivers so that we can get the kind of results we intend to get from those waivers? You know, and I think that is the way in any environment we have tax waiver to stimulate industry, to stimulate a particular sector that the government may be interested in developing. So it is not out of place, but what is most critical is for us to track the impact. And also looking at the road infrastructure scheme that the FRS also spoke about, you know, as part of their receipts, you know, is one of the good policy, you know, take up a road, develop it, and then we give you the tax waiver. You know, you can see the development. So more of such schemes.
And it can stimulate economic activities.
You know, more of such waivers are the kind of waivers that we should be looking at going forward.
All right, thank you so much, Mr. Emmanuel Onasami, lead partner with Cardinal Professional Services, for sharing your thoughts with us this morning.
Thank you very much, Ine.
Enjoy the rest of your day.
Bye.